Hi guys, in this video I'm going over chapter 4 practice problems. Part 2, we only have 4 problems. You can watch this video and then apply it to your numbers. You should have different numbers. All right, so Zach attended Champion University during 2013 to 2017. He lived at home and was claimed by his parents as a deduction during the entire duration of his education. Because remember, before this year, you got to take dependents as deductions. And people are still able, the reason we still care about that, even though we don't get the personal exemption, is because of all sorts of credits related to those dependents. So he incurred education expenses, $25,000 during college. Now, you know how when you take out loans, it's separate from the scholarship, right? The Education Institute or whatever groups give you scholarship, and it may come through at a different time. You can still get loans for your full amount of education expenses. Okay, so his total education expenses, which is critical, was $25,000, and he took out loans for the full amount. We'll see down here. To finance his education, he borrowed $14,500 through a federal student loan program and another $10,500 from a local lending institution for educational purposes. After graduation, he married and moved with his spouse to a distant city. In 2018, he incurred $1,450 of interest on the federal loans and interest. What amount of student loan interest can Zach and his spouse deduct in 2018, if any? So during 2013 to 2017, his parents are taking qualified education expense credits or deduction based on their situation for the expenses because he's a dependent. So they qualify to take a deduction for his expenses. Then once he's out of school, so in 2018, he incurred $1,450 of interest on the student loans and $1,050 on the lending institution. When it says he incurred it, that means he spent it, right? He paid that amount of interest, so it's deductible. Now he's filing a joint return with his spouse and showing modified AGI of $128,500. So that's pretty high. So we need to first check the limitation. So look in your book, or you'll have a button, I believe, in the problem when you're actually in a simulation. As a student, you can click the button and it will take you to that section of the book. So be sure, that would be the first thing I would check. And then I would look in the book to see the calculation, because this is not the phase out calculation, but because they are below the limitation. So they are below 135,000, which is the modified AGI threshold for student loan interest deduction. If they were above this, then there is that phase out calculation. So over $30,000, this deduction phases out. It gets smaller and smaller. Instead, although he took out $25,000, we have to account for the fact that he got $6,500 of scholarship. So the way we do that is we look at the total percentage that qualifies. You can see here they're saying only 74% of his borrowings went to qualified education expenses. So the way we get that number is we're going to go 25,000 minus 6,000 is because that was a scholarship. He didn't spend that money on education. So 19,000 divided by 25,000 equals $76. Oh, I did 6,000 instead of 6,500. So that brings us, and you can do it multiple ways. They're probably doing 6,500 divided by 25,000. So that's 26% that the loan accounts for, and then we can minus 100%, 74% is the other amount. Or we do the route I was going here, I just used the wrong number. So 25,000 minus 6,500 gives us 18,500. 18,500 divided by 25,000 is 74%. So we calculate the deduction by taking our total student loan interest, so $2,500. He's right at the maximum amount. So he would have been limited anything over that anyways, and we timed it by our limitation percentage, 74%. And that equals 2,500 times 0.74, 1,850 right here. Okay, next problem. Fabian, a single member of military, was stationed at White Sands, New Mexico on January 1, 2018. His Army company transferred him to Florida as a permanent duty station. Fabian worked full-time during the year for the entire year. During 2018, he incurred and paid the following expenses related to the move. So this is that moving expense deduction. There's all sorts of pages about it in the book. It's pretty straightforward now because they removed many of the nuances and it only applies to military, which it's so unlikely that he would not receive reimbursement for any of these expenses from the Army. His AGI for that year was $84,000. What amount can Fabian deduct as his moving expense on his tax return? So they're saying Fabian can deduct $5,850 in moving expenses. This includes the lodging and travel costs. So we have $2,450 and we have $3,400. So the cost of moving furniture and personal belongings, lodging and travel costs, pre-move house hunting costs no longer qualifies at all. This used to actually, some of which qualify. The deduction used to be very complicated, but that's what I mentioned. That's why it's so long in the textbook. However, they've really made it pretty straightforward. As moving expenses are above the line, his AGI was not a factor in the amount of the deduction. Okay, just, look into the book and do a little bit of reading if you haven't watched the video. If you have watched the video, it should be very clear, so just review those sections. You could post in the forum, talk about them. That's a great thing to do. Otherwise, I'll see you in the next video. Bye, guys.